Good evening, everyone. Adam here from Bold Logic doing a market analysis video with you. Ooh, what a day today. These kind of days make you glad you're swing trading longs and make you disappointed if you're a day trader. The ECB released some news to let everybody know that they're planning on buying some bonds. They actually have a meeting September 12th to see if they can actually do that or not. So definitely focus on that day when it comes around. We did get a nice gap up this morning, coming in at a little under 1% for our gap up. Days like this make it really hard to be a day trader. You get a 1% gap up, you got your alerts all triggering all at once. As soon as the market opens, you're trying to figure out what's going on, what's gapping up, what's actually moving. Are you chasing this stock? Are you not chasing? It's really hard to tell. Is the market just going to run up 1% and then roll over and come back down? Is it going to follow through with some gusto today? So you don't really know as the market's going on. You don't really have a chance to get a footing and get some trades going on. So these gap up days make it very difficult if you're a day trader. If the market moves up 1%, how much higher is it going to go? Can you realistically expect it to go to 1.5? If it's already at 1.5, do you realistically think it's going to go to 2%? Because 2% days just aren't that common. They just don't really happen. So as a day trader, it makes it very difficult to try to figure out what exactly is going on and what's going to happen. A lot of times, short trades are actually a lot better than long trades in these kind of markets, just because they're a lot easier to deal with. The market gaps up; it ran up to 2% or 1.7-ish percent, by the afternoon, and then it kind of just piddled around there all day, doing absolutely nothing. So it becomes a real difficult market to trade if you're just trying to day trade it. However, if you're swing trading, then the sky's the limit for you, especially if you're going long. Then you're just hitting it out of the park. All your stocks are gapping up. You're trying to sell off shares and move up your stops, and everything's good for you. So hopefully you were swing trading some longs. As we said, this has been a very bullish market, had a very bullish undertone to it, especially with this consolidation, this pullback off these highs. As you see, our nice descending triangle that was formed, we're holding our lows, coming into this lower support. We never made it there before we just broke out higher. We're now out of our range from here in the last April, and we're just moving up to new highs. Looking like we're going to target this upper trend line in that 1440 level, so definitely going to keep that on watch. Tomorrow's going to be a nice tell. Again, we have the employment numbers in the morning, so that should move the market. I wouldn't expect too big of a move to the upside just because we already had a 2% day to day. Expect more of a digestion day. See if we get a small red candle, maybe a small green candle, something just to work off these conditions, let people figure out, oh, okay, this happened Thursday. Let me reevaluate. Not a lot of charts are going to be out there ready to be picked because a lot of them went already today. So you just got to keep a watch. So tomorrow, expect a little movement. If we do have good numbers, if we have bad numbers, then we might erase some of these gains. I wouldn't expect us to erase all of them, but we could erase some of them, maybe 1%, maybe 1.5%. Looking at the Russell, we did see that breakout that we've been talking about. We actually saw it pop over that 830 level and move up higher. We're targeting that 848 level. That's going to be our April highs, or I should say our March highs. So definitely keep that level on watch. We are getting a bit overbought here on the Russell. As we said, it was one of the stronger indexes, so it is starting to get a little bit overbought. It's still in the beginning phases, so it could still move. This is why I said we need a digestion day to work off some of these overbought conditions in the Russell. Looking at the NASDAQ, wow, another strong day here, up over 2% like all the others. As you can see, we came into this resistance at that 3,135 level. Did finish on highs, which is very strong. Had a nice consolidation in the intraday level. Definitely going to have to keep this one on watch, see if we do pull back here at this 3,130 level, or see if we can move a little bit higher past that. Amazon had good news today as they released their new Kindles, all 4 of them. Google stole the show today, jumping up another 2.7%, busting almost the $200 level, or sorry, that $700 level. Definitely all-time highs for that stock, so It's really helping move the market. Taking a quick look at the VIX, saw it down 12%. This is always a good thing to see, but we would have liked to actually seen a little bit more. With a 2% up move, you should really see a 14 to 16% down move in the VIX to really confirm it. Probably still a little bit of volatility holding just for this Friday numbers. And so we'll have to see what comes out of that going into tomorrow. Again, hopefully you were swinging long going into today. If not, then we'll just have to wait for the charts to reset up before we can really get some good picks. We have our best looking charts up in our watch list, so definitely make sure you check that out. We had some good runners off of it today and have been having them all week. Hopefully that helps you. See you Friday, everyone.